Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. I recently compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index for ADM ISI to find it. In this, I looked back and found a very relevant technical pattern for the actions seen since mid-December last year. That key piece of evidence I created here on this daily chart is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece is the bright red upper tone, which is currently at 13,353, and that sits just above the top of the market, and which has capped the two significant thrusts higher we have seen in January this year. Indeed, this is the key piece of overhead resistance and only piece of resistance seen here since the break up and out of the recent showrunner of this market in mid-December last year, the dark blue July 22 to January 23 shallowy bullish shift pitchfork. This break higher originates and follows on from the head and shoulders continuation pattern seen between late September to late November 2025. So this leaves us with the question, what now? Well, there are at this time two possibilities, and we should see a result by mid-February, as well as the likelihood of some false breaks as well. The first possibility is to look at the whole 2026 action so far as a possible double top. This is not a fully formed pattern as yet, but we are quite a long way towards it. And it very much depends if prices can get down to the 12,515 zone and then break below it. It is too early to say if this is the pattern, but the build-up does exist. Second possibility involves the previously mentioned bright red upper tone plus the newly drawn bright green late November 25 today uptrend, currently at 12,715. Together they may be forming a possible ascending triangle. I grant you neither trend line is perfect, especially the bright green uptrend, but the opportunity for such a pattern exists and it deserves close attention. The advantage of this pattern compared to the double top is that it has the chance to be both bullish and bearish, whereas the double top is a solely bearish pattern. In all this, please be aware of the high chance of false breaks in either direction. And here is the third option, which I haven't really mentioned as such, but it's something to consider, and that's to consider the whole action since probably mid-December as a possible bullish halfway hesitation, but we're not down that route yet. LME 3-month aluminium. The break higher up and out of the dark blue late September to mid-November 2025 bullish shift pitchfork was coincidental, and by the way, I do not think it is an accidental coincidence, and was at the same time as a move up and out of the more longer term bright red December 23 to July 24 bullish shift pitchfork. My reasoning for this is that if you were going to break higher, then best to smash two patterns close together. The dark blue upper tine, currently at 31.15, cross the shallower bright red upper tine, currently at 30.68 on Christmas Eve, and the market punched higher on the 5th of January. Now there is the possibility the market may now move along the top of one or other of these upper tines, and it seems to wish to do that with the now broken dark blue upper tine, and that is something to watch out for, as is the possibility of another larger pattern that may be in the offing. This is not a very defined pattern as yet, and I don't think it has the required number of touches per side as yet, but we have an April 25 to date very large rising expanding wedge pattern outlined in bright green on my daily chart. It's currently 28.56 to 32.70. We are still within this pattern, if a little under the bright green upper trend line, and I suggest it is also one to watch. Finally, one other feature to watch, and one that became evident to me on my longer term chart when compiling the annual video commentary. You can find that on the ADM ISI YouTube channel. It is a very large November 2015 to April 2020 bullish Andrews pitchfork, which I've transposed onto this daily chart and highlighted it in purple. The nearest is the purple upper tine above, currently at 42.12, just under the top of my daily chart. This is not a target, but a likely resistance, as it sits close to the July 2008 high at 33.80. To test this, we would need stabilization over the dark blue upper tine and following the bright green trend line higher. Now, I'm not sure yet whether the market can do that. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October last year and in late November as well. And, as I said 7 weeks ago, enough that I no longer think this pattern is viable as a rectangle. End of quote. The recent break lower halted in mid-December last year at the 38.2% Fibonacci line for the whole of the 2025 move at 1939, forming a 3-day bullish morning star pattern, and moving higher up to test the 2025 high late last week at 21.05 and fail. I suspect this failure was mainly due to the nearby 50% Fibonacci line of the May 24 to April 25 move at 2098. Indeed, I think this caused the high in November last year as well as the early January this year high. Since then, we have pulled back lower, down towards the first of the decent moving averages, the green flatlining short medium moving average, and that's currently at 21.06. We haven't reached it yet, but we are not far away. Thus, whilst we can say the range of the market has been extended somewhat following the dog days of August through to October last year, we cannot say anything other than that at the moment. There is no real trend here, and all the major moving averages are still closely packed together. This brings me to my final and it is a point final point is something I've been making here since the start of 2025, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December 2024, we saw that the year of 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, and indeed prices are less than $100 higher than at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure. Hence, I still say, even now, with prices higher than at the end of 2024, one should still look at all things going forward, in this year and beyond, in this metal in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.